Hello, this is Alex Kazmark for the FXEdge.com, and this is your free daily Forex video for Wednesday, December 2nd, 2009. Quick reminder before I begin, the purpose of this free daily video is education and not an alert service. I'm not going to make any trade recommendations, but what I am going to do is point out levels of support and resistance for the next 12 to 24 hours. Please keep in mind that trading with leverage is very risky, so please don't trade any real money until you've established a proven track record of success on a demo account. Trading conditions are always changing, so make sure to watch tomorrow's video to stay updated. Well, we continue to see more dollar selling with US equities setting a higher close. This leaves the door open for Asian and European equities to rally and sets the stage for another disappointing session for the dollar. Our bias is for further dollar losses, especially after hawkish comments from the Royal Bank of Australia in regards to their economic recovery and the potential for further interest rate increases. Price action remains to be consolidative, and we expect the majors to continue grinding out more gains against the dollar. There is still serious risk involved in taking a trade against the buck, so we urge caution setting wide stops. Currently looking at the euro dollar on the daily, trading at 150.80. We managed to set a high at 151.20, and we're going to disregard the 150.80 level for now, but we're going to keep the red line in here. Our first level of resistance is going to be at 151.20. Above that, we'll be looking for the recent highs at 151.50. A break above that is going to be interesting, as we don't have any recent levels of resistance, so we'll see how the market plays that. First level of support is going to be at the 150.20 level. Below that, we'll be looking at the 150 level. Psychologically, that's going to be important, even though the market has been able to wick below that near the 149.50 area, which is going to be our third level of support for the dollar. Below that, we'll be looking for 148.20 and 148. Next up is the pound dollar, currently trading at 166.12. First level of support is going to be at 165.80, followed by 164.50. Below that, we'll be looking for 162.40, 161.20, and 158. The 158 figure is quite a ways out there. We'll keep that in there for now. However, we need to see a real close below the 164 level in order to possibly see the 162.50 and the 161.20 level. First level of resistance will be at the recent highs at 167.50. Above that, we'll be looking for 168.50. A break above that will target 168.80, and above that, we'll be looking for 170. Dollar Swissy on the daily, currently trading at 99.97, 99.92, excuse me. First level of resistance is going to be at the 100.30 level. Ignore this red line. We were going to be using this parity level in the future. We are sure that the parity level will be an important dollar support or resistance level. At this time, trading just under the figure, we're going to leave this number out. So once again, first level of resistance is at 100.30. Above that, we'll be looking at the last couple of days of resistance level at 100.80. Above that, we'll be looking for 101.80, 102, and 102.80. The two levels of support for the dollar are going to be found at 99.50 and 98.80. A break below that is going to open up another door for further dollar selling. I think at this point it's going to be difficult to get below the 98.80 figure. Looking at the monthly chart, we can see that we haven't had anything below the 98.80 level going back to February of 08 when we reached 96.40. We'll talk about that level once we break 98.80, but that is going to be our third level of support for the dollar at 96.40. Again, we don't anticipate to break 98.80 in the next day or so. However, once we start getting close to 98.80, we'll analyze what happened during this wick. Once again, this is on a monthly level, and as you can see, the market was not able to close below the 99.50 level. Dollar yen on the daily, currently trading at 86.73. First level of resistance is going to be at 87.20. Above that, we'll be looking for 88.20, and a close above that, we'll be looking for 88.80, 89.50 and 90.80. Our only two levels of support are going to be at 85 and 84.80. A close below 85 is going to be very important. We had projected the 85 level a few weeks ago. I believe this was towards September when we were talking about the 85 level. We had a short position. However, the short played out for a profit. It didn't quite reach the 85 level. We do anticipate a bounce off the 85 level. The fact that this is on the daily chart. Once we reach the 85 level, we bounced off the 85 level, closed higher. This is a bullish sign. Even though we continue to go a little bit lower, yesterday's break higher opens up further room to the upside, and we're going to be taking a long here shortly, possible long position we'll discuss in our members area. If you'd like a more detailed analysis with potential trade opportunities during our live trading session, please join us in the members area. This has been Alex Kaczmarek for the FXEdge.com free daily Forex video for December 2nd, 2009. Until tomorrow, good luck trading.